Good morning, Fatima.
Good morning.
Thank you so much for joining us. I'm quite excited to have you here on our YouTube channel for Compliance Institute Southern Africa.
Thank you for the invite.
Absolutely, I couldn't not invite you with your credentials. Just to mention to our audience that Fatima has got her own consulting business. It's FBT HR Consulting. If you want to have a look on their website, it's www.fvtconsulting.co.za. So the FBT is her Fatima van Toorn, her initials, and she's got 25 years of HR and labor background. They are HR generalists, but they do everything that she said to me from onboarding to exiting, and it's probably an opportune time to speak about these things, Fatima. I've been listening to and reading a lot about what's happening in the current situation with COVID-19. We hear things about short pay, short time, potential retrenchments, companies going down, very big companies going down, so sad. Virgin Australia and our own grounds, Edgar's and so on. But I think from an HR and a labour law perspective, I would really like to get some perspectives from you and perhaps some advice for our clients who are compliance officers, our members, so that they can also assist the companies that they're dealing with, with good advice. So if you could talk us through that, that would be great. Thank you.
All right. Well, let's start. I'm going to separate what happens in May from what happens now in April. So as we know, a lot of companies couldn't have their staff working remotely, and a lot of companies have been very distressed in terms of how to actually fund their payroll for the month of April. And there's been a lot of changes from when the national lockdown was implemented as to where we are right now. So the changes are good, that in the beginning, when companies had to force people to go either into temporary layoffs because the nature of their jobs did not allow them to be able to work remotely, or in cases where companies had some work but not enough work, and we call that reduced work time. And then, of course, there have been companies that have been financially distressed in that even though their staff could work, they're not getting paid because of their clients not also being adversely impacted on by the COVID-19 pandemic. And we also know, as you rightly said, many companies are going to be struggling right even after the national lockdown has been uplifted. So in the beginning, when the lockdown was implemented, a lot of companies started applying for reduced work time UIF benefits, which was extremely onerous because it was a whole lot of paperwork per employee, which the employer then would submit on their behalf to the Department of UIF. Needless to say, many of those applications still haven't been paid. It's just caused a lot of backlog in the system. And then in the beginning, the government announced that there was this National Disaster Relief Fund, which is called TERS. It's basically a temporary employment relief scheme. And that is being administered by the UIF. And initially, they said that that was only available for companies who were shutting down operations for 3 months or less, and where they obviously could not pay their employees. In other words, companies in distress. The good news is that that has now subsequently been relaxed on the 8th of April by the minister. So a lot of companies now who didn't officially close their operations for 3 months, who only perhaps closed some of their operations. In other words, some people can work and some can't. And even companies that are not necessarily financially distressed, meaning not necessarily going into liquidation, but are suffering some kind of financial woes during this time, they are now eligible to apply for COVID-19 TERS. And it's far less onerous. Literally, companies just need to send an email to the email address called COVID-19 TERS, and then they get an auto reply, and it's a very simplistic process to apply online for COVID-19 TERS benefits. So to wrap up or to sum up, employers are able to apply if, for the following reasons, they've got staff on reduced work time, in other words, what you would call short time. So staff can work, but not work every day, or not work their full hours, not necessarily work their full month. And then, of course, people who can't work at all, which are placed on a temporary layoff because the nature of their work doesn't make provision for them to work remotely. And then thirdly, companies that are financially distressed. In other words, they cannot pay the staff this month, or they have to dig deep into their pockets. Also, in the beginning of the lockdown, a lot of companies forced staff to take annual leave, which at the time seemed like a fair option. It obviously doesn't help companies' cash flow, but at least a lot of companies were willing to at least let the staff take annual leave. But government has suggested that that was not the right thing to do, because as we all know, these are not exactly the ideal circumstances for staff to take annual leave. And especially on the lower end of the scale, which I'll explain the scale now, it makes sense to rather let COVID-19 TERS benefits assist to pay the staff, and then rather preserve their annual leave for when they can take the annual leave in better circumstances. So I just want to kill this one app here that it doesn't interrupt our recording. All right, and then to continue with the scale of benefits, the scale of benefits is 38 to 60% of the capped amount of 17,712. Which means that the lower end earners, people that earn under 17,712, there's a higher chance or higher likelihood that they would get up to 62% of their salary, but to the cap, as we said. And then, of course, people on the higher end, people that earn much more than 17,712, would be lucky to get 38% of the 17,712. So what we've been seeing, Rihanna, is that companies are generally getting paid for 35 days because they've applied from the 27th of March up until the 30th of April, which is 35 calendar days. So where their UIF applications have been processed, they have been very pleased to report that government have paid 35 days, which means that staff have been getting up to 7,744, I think was the top number. And nobody got less than 3,500. And what was interesting is even people that were casuals, what we call flexi staff, that earned less than 3,500 on average in the last few months, they actually got more money. They got 3,500, which was more than what they've been earning, which was quite sweet to me. And then basically for the month of April, we've also encouraged companies who originally submitted applications through the reduced work time UIF portal to rather resubmit online. So one can cancel your original application and rather apply online. It's far less onerous, and the turnaround time is pleasingly fast. We've had companies applying only last week, and they literally received funding within 2-3 days. So UIF have come to the table and come to the party here to make sure that people do get paid in April. So have I just in summary told you what has changed in the last few weeks?
Yeah, I think that's the kind of noises that one was hearing about, so a lot of confusion around this scheme. And then people were saying, but my employees have still not been paid and so on. So I'm assuming that was from the first round, so to speak. Yes. And then if we cancel that first initial application, is that also an online process?
Yes, one literally just has to send an email to the same fax to email address that you would have sent your reduced work time UIF application to. So for the different provinces, there was a different fax to email in one of the department's easy guides, which gives the email addresses, as I said, per region. So one would literally just send an email. They're obviously picking up a lot of duplications. I mean, some companies have submitted 3 or 4 times because they pick up errors and resubmit. So the department have actually in the media reported that they're dealing with thousands and thousands of applications. Thousands of applications have been rejected because of errors, but they at least have the courtesy of contacting those employers and asking them to resubmit and to correct the errors. And then even to go back with annual leave, a lot of companies, as I said just now, in the reduced work time application indicated that staff were taking leave. And now they've realized that was not the right thing to do, and rather submit a new online application where you would show 0 income instead of the leave value, because the idea is to get the COVID-19 TERS and rather pay staff with that money than reduce their leave balances. So the idea is, and I'll explain the pay slips just now, but the idea is that the company has to obviously pay the employees the money it receives from COVID-19 to TERS and either top up salaries or reduce people's leave balances. I mean, not reduce, increase it again.
Yeah. And I think that was one of the other worries, is that, it's one thing and it's a very easy process, as you've explained now. The company applies, they get the money. And how do we make sure, how does government make sure that that money actually reaches the right pockets?
Yes, yeah, that's a great question. There's an MOA, a Memorandum of Agreement, that employers need to read. So when you do the online application, the MOA is actually online, so one just has to read it. And then in that MOA, it clearly states that the company then undertakes to pay their staff within 2 days of receiving the money into their bank account. And then on the online submission, there's two Excel spreadsheets that an employer gets. One that shows the accepted employees that have been receiving the benefit, and then there's sometimes a list of those that they've declined. So if they've declined, it might be for reasons such as the employee already has an active claim in the system, or there's a problem with the employee's bank details. So even though the money is getting paid into the company's bank account, they obviously do an auditing verification process, and they want to obviously see that the employee is registered with the department. What is strange, though, is that COVID-19 TERS is supposed to be unlinked from employee credits. That's what they said all along, and at the moment it looks like that's not the case. So if somebody has a maternity claim in the system, they pick it up, and then they would notify the employer that this person's already receiving a maternity claim. They can't claim from two different pots, because they can't profiteer and get more money than that which they're already receiving. So there's obviously some areas where employers need to go back to them, and they give you an email address where you can go and either send proof that the person has come back, is no longer on maternity leave. We've even picked up one yesterday where the person last claimed maternity leave 5 years ago, but the department hadn't closed that file or that application. Yeah. You want me to explain the payslip situation as well at this point?
I think so. I think that's quite important. Yeah, let's talk about that.
Yeah, so this is the bad part. So there have been a lot of employers that, out of the goodness of their hearts, and have really dug deep into their pockets to pay staff quite a percentage of their April salary, even though they weren't able to work or were working, very reduced work hours. So those companies in the online submission would then declare that they've paid their staff something like 70% of their normal salaries, hence only applying for the 30% shortfall. And sadly, a lot of those employers' applications have been rejected because the person's income that they're receiving from the company exceeds the income replacement ratio, which the department uses. So the companies that have shown zero income declared, in other words, on the online submission, they would show something like they didn't pay their staff at all because they're only giving them advances. In other words, there is no money to top up salaries, or people haven't taken leave. Those companies are the ones that have been getting income for all 35 days from 27 March until 30th of April, and they've been getting the max of 7,744 or 4,027 for the lower income, which, as you know, now is more than the minimum national wage of 3,500, because government are paying for 35 days. Surprisingly, they've even paid for the public holidays in April, which I really didn't think they were going to pay for, because they could have argued that employers would have had to make provision for those public holidays, irrespective that they happened to fall during the national lockdown. So the bad news is that the department have, in an interview with NIASA, which is an employers organization, on the 25th, last Friday, have admitted that they've made a mistake in their calculations, because they've actually compromised the employers who paid, or topped up salaries. They've actually deducted the amount. There was also an article by SAICA, the South African Accounting for Chartered Accountants, last week, that gave a good example. If somebody earns 6,000 a month, and if the company paid something like 2,800 Rand towards that person's salary, they would deduct that off the UIF benefits that this person is eligible for. And this poor person then only got 800 Rand. Oh. So by the company offering a top-up, they actually compromised the application. So on the one hand, we're not for 1 minute suggesting that you commit fraud, but on the other hand, it does look like companies that are contributing are being compromised. So the idea, and government is saying diabolically, is top up and give staff advances, and if you have paid out their leave, it's fine. You can still claim the money and fix it the next month, or reconcile the next month. But the idea is, my advice is to rather, if you haven't already processed your payroll, and I know it's already the end of the month, is to rather to give staff advances. And then next month, if I go back to the payslip, the month for April ideally would just show an advance. In other words, on the pay slip, there would be purely an advance, especially I'm talking to companies now that don't have finances to pay staff, or where staff have been on a temporary layoff. In other words, no work, no pay. You don't want your staff to be compromised in April, so you would declare an advance, but on your online submission, it is true that you haven't made a payment because they haven't been able to work. So it's no work, no pay, and all you've declared on your April payslip is an advance. And advances are not subject to pay as you earn in UIF. So the poor person at least will get a net amount, which is either the same as what they used to net before the national lockdown, or as much as the company can possibly give them as an advance. Then, hopefully, in the next few days, the company will receive a lump sum into their bank account. And like I said, on the online system, there will be 2 spreadsheets, one giving a schedule of who has been basically credited, with certain UIF payments, and the ones that have been declined, and of course the declined bunches that the company needs to go and resolve the queries there. But then on the May payslip, let's just say the employer is able to accommodate everyone back in the workplace in May. If you're an essential service or you're able to have your staff working remotely, then you would declare on the May payslip what they really earned for May. On the left-hand side, you would declare the COVID-19 UIF benefits, and you'd call it that. You'd actually call a line descriptor something like COVID-19 UIF benefits, and you would show that amount. Then on the right-hand side of the payslip, you would deduct the advance, because now you've given them an advance in April, so you've got to offset the advance against the COVID-19 UIF benefits. And of course, there's going to be a shortfall. There are going to definitely be shortfalls, especially for the higher income earners. And that's the time when the employer could say to you, Rihanna, you've got a shortfall of 10,000 Rand in your salary for May because we only received 6,000 Rand and we've advanced you 16,000, for example. Then the employee has the right to say, but is it possible that I can then offset some of my leave balance against that shortfall? In order that I'm square, and as I don't owe the company money and I don't want to be worse off in May. Or, of course, where some companies can afford it, they could also top it up in May. So in other words, there would be taxable income on the left-hand side of the payslip to gross up the shortfall. So some employers that financially can will top up, and in some cases, if employers can't top up, the employee should be given the right to actually, as I said, offset some of their leave. We've also got some companies that are going to treat it as a loan and allow staff a couple of months in which to pay back, the shortfall. And that would be all depending on affordability. But the bottom line is the important thing to note here is that the UIF money is not taxable. So that's good news. So whatever money comes in from UIF on the left-hand side of the May payslip, you do not let that be attracted or not attached to UIF skills levies or UIF, and nor the advance, if you are able to offer staff an advance.
Fatima, you also mentioned to me that tomorrow is quite an important deadline. Just remind me, that's why we're actually having this video conference today, so that we can get this information out to the members, to the Institute's members.
Yeah, that's a brilliant question. In that regard, originally, when COVID-19 TERS was made available, as I said in the beginning of our conversation, is government said that available TERS fund would be available for 3 months or less, depending on how long companies were shut down for or were distressed and unable to pay. As I already mentioned, they've relaxed the provisions for eligibility to say if you're on reduced work time, temporary layoff, or only closing part of your operations, or financially not able to pay your staff, or where staff have taken reduced salaries or been forced to take leave. So all those reasons I've already covered are reason to apply. But now they've said that the COVID-19 TERS is only available during the national lockdown. And as we know, we are going into level 4, but it doesn't mean that a lot of companies can go back on the 1st of May, let alone even have all their staff working remotely. We've been going on the system all the time, and at the moment, the portal or the window is only 27 March to 30 April. So government haven't indicated what now. In other words, what happens after 1st of May, because we all know there are going to be tons of people out there that still can't work for the month of May. So the reason why we're saying tomorrow is so important is until government declares that this window of opportunity is open or extended beyond 30th of April, I would say get your application in fast. The negative is that the system is completely slow today. You're struggling to get into the system today.
I would imagine.
High volumes of traffic. They've actually announced that. So this reminds me of our normal time of the year when it's employment equity time or skills levy time. So a lot of your members that have to do, skills submissions or employment equity submissions will remember that a lot of the government portals do exactly this at this time, at crunch time. So because of that, we're already hoping that they're already going to realize that they're compromising employers' ability to claim. So we are hoping that they will extend the deadline beyond midnight tomorrow. But for safety's sake, get the application in. And the other part is if staff are still not able to work from 1st of May, and if the COVID-19 TERS option is no longer available from 1st of May, the reduced work time option will still be available. And that's available for 12 months. In other words, if this easier portal is not available, then and staff are on reduced work time or temporary layoffs, it's a bit more onerous because there's a UI 19, there's a UI 2.1, a UI 2.8, a UI 2.7, a whole bunch of forms.
I'm glad you remember those numbers.
Yes, yeah. So I had to look down to remember the one is the UI 2.1. I always forget that one. But it's onerous because, you know, the person has to get proof of bank details and it's signatures. And how do you get people's signatures that aren't able to scan and print from home? It's a mess. So we are hoping that for that reason alone, that they extend the COVID-19 TERS, because government obviously know that it's a lot less onerous for the employer and the employee, and it just makes their life a lot easier. So the big important message is that employees cannot be expected to apply for UIF. You know, government, and we've seen it in the media, that a lot of employers have failed to assist their employees to apply for these benefits. And that is, in my opinion, quite cruel, because they don't want staff coming to the Department of Labour offices. I mean, with the whole social distancing, what's the point? You know, so you can't expect them to make their own applications. And with all due respect, employers that have said, oh, we're not wanting to apply, we're just compelling our staff to take leave, I also think that's cruel, because as we've already said, the conditions to force staff to take leave right now is not ideal. But if an employee that earns more money says, I can't live on 6730, which is the maximum amount of UIF benefits, and if someone on the lower end says, I'm accustomed to getting 6, but I only got 3.5, then yes, then you allow the employee to say, may I please take some of my leave to offset the difference? That would be fine. But to force staff to take leave just because we don't feel like applying for COVID-19, I think is not right. It's not fair towards the employee. And even if you have already processed leave for April, government have said it's okay, it's all right. You know, still apply for COVID-19, but then increase the, reinstate the employees' leave balances when you get the COVID-19 funding.
Thanks, Fatima. I think just as a sort of a parting comment, or a couple of comments perhaps, companies that are really struggling, would you advise at all that they look at retrenchments, or is that something that you would caution against?
Yeah, no, that's also a great question. A lot of companies have already started implementing what we call Section 189 processes. Section 189 is the section of the Labour Relations Act which governs retrenchments, and then Section 189A, which governs large-scale retrenchments. So the difference is if a company has more than 50 staff and they are thinking of retrenching 10 or more staff, or have retrenched, let's say, 5 in the last 12 months and are thinking of retrenching another 5 now, because it falls within the 12-month period, they would fall under 189A, which means they anyhow have to consult for 60 days before they can retrench staff. And for companies that are already distressed, 60 days is a long time to consult. And secondly, you know, unless the employee waivers their right to the 60 days, and not many employees are going to waive their right to 60 days because they've got nowhere to go to. So the main reason why I personally suggest that companies not rush into retrenchments are the following reasons. Is, as I've already mentioned, the reduced work time UIF benefits are available for 12 months. Now, those of you that have ever had to assist employees in the past to apply for UIF, whether they were on maternity leave or whether they were retrenched, would know that generally speaking, employees couldn't claim for longer than 4 months. And government have now made the reduced work time UIF benefits available for 12 months. And if you think so many industries, like, for example, the travel industry, they can't work for the next couple of months until the travel bans are lifted. So we have companies out there in the travel industry that already know that their staff are going to be on temporary layoffs until at least September, October, November this year, which means they don't want to retrench them, because when the travel bans are uplifted, and a lot of your members too might be in industries that there'll be a delayed impact before they can officially, you know, start producing revenue again in their businesses. So the message to the employer is, A, the employee can claim reduced work time UIF benefits for up to 12 months. So whether they're on reduced work time or whether they're on a temporary layoff. In other words, you've got no work for them and they can then claim UIF for 12 months. On the employer side, if you know that you're going to possibly need to re-employ them in the 12 months after they've been made redundant, it makes no business sense to retrench them now, to pay 1 week's severance pay for every completed and continuous year worked, plus, of course, their annual leave, which is anyway due to them. Notice pay as well, although one could technically argue that if somebody is still on a temporary layoff, it would be unfair to pay them notice while their counterpart colleagues are on a temporary layoff. So that's a technical arena which we haven't got into yet. But the bottom line is it makes no sense to pay out severance pay. Imagine you have a staff member that's been with you for 20 years. You now have to pay 20 weeks of severance pay, plus their annual leave, and plus consult for 60 days. And then 4 or 5 months down the line, your business has picked up again, and now you need to re-employ them. Obviously, they could turn down the job, but it makes no financial sense. So my advice would be use the reduced work time benefit. It's there for 12 months. Provided the employee has 365 credits. So the reduced work time UIF benefit is linked to employee credits, meaning if the employee has contributed to the fund for 4 years, they haven't claimed in the last 4 years, they've got a pot of 365 credits, they will then be able to claim for 12 months. So if an employer says, but we know we're doomed, we're kicking the can down the road, and it's unfair towards our employee, to keep them hanging on a string, then yes, I get it. If you need to start the process, then I get it. But if you know that you're just playing for time and waiting for times to get better, then use the reduced work time UIF benefits.
And I think you haven't even, we're not even touching on the impact on staff morale. So if you are a company that could continue after this, these lockdowns are lifted and so on, we're not even touching on those aspects. We're just talking purely financial now.
Yes, yes.
Then I think, Fatima, so just quickly, there are a couple of tax laws that are also providing relief, but those reliefs are more in, you have to repay them. So if I take, for instance, the 20% on the pay as you earn reduction in that payment, it's okay. You can do that to help your cash flow right now, but know that you're going to have to repay that at some point. It's not a permanent discount, so to speak.
Yeah. So UIF, VAT, provisional tax, all those things, it's basically, like you say, it's a reprieve, but you still have to pay. So if one can afford to, rather keep your payments and keep it going, but because it's just basically going to be a lump sum, a couple of months down the line. There are obviously a lot of financial relief schemes out there for especially the SMMEs. So I can also send that to you if you want a list of where members can possibly apply for funding. But again, it's a lot of it's loans, interest-free loans, but it's still loans. It doesn't really help a struggling employer. So the obvious one is get onto the COVID-19 TERS. That's the obvious one that you don't have to pay back. And at least it is happening. Companies are getting paid.
So Fatima, thank you so much. Very valuable advice. So just to remind the viewers, your website is fvtconsulting.co.za. You can just have a look on there, and I'm sure they will find your contact details on there as well. If they wanted to send you and they needed some advice and assistance during these times on these matters that are very complex, actually. These are not easy things to implement,
Yeah. I just want to add one more thing before we close, and that is, I didn't discuss with you, Rihanna, is about the requirement to consult. And I'm very divided about the advice there. When it was during the national lockdown and companies were not able to let people work just because the nature of their job functions didn't make provision for it, then I'd advise a lot of my own clients to say, well, government can't really expect us to consult because the national lockdown was not imposed by you as the employer. It was out of your hands. So you don't need to consult until the cows come home because it's not your fault that your staff couldn't work. But when the lockdown is completely uplifted, or even if you're an essential service provider and your staff could effectively legally get back to work, but you don't have work, or your company is taking strain, you've had cancelled orders or whatever it be, then it makes sense to consult. And the lovely definition of consultation is it doesn't have to be agreement. So if a company positions why we have to put certain people on reduced work time or why we have to put certain people on temporary layoff, or not everyone, as long as you consult, you give the staff the rationale, And another thing to do is to even consider decreasing staff salaries as a measure to safeguard the company and safeguard whatever funds you have in your kitty to be able to keep paying people for as long as possible. So many companies are already introducing salary reductions, and it doesn't take a lot of consultation. It's just giving staff the rationale and giving them a chance to come back and revert with proposals or other recommendations. The same with the reduced overtime, same with the temporary layoffs. I'm finding that staff in general are not opposed to companies' measures to try and safeguard the company, to survive, make the company survive, and of course to safeguard employment. So we're all in this together, and we're not finding employees to be aggressive or non-cooperative during these times. So that's at least encouraging. And it is the fiduciary responsibility, as we know, of the directors to safeguard the company. So do what you need to do and consult, but it's not as onerous as it sounds. And we can also assist your members with templates. We've got all kinds of templates that we've designed to notify staff of the reasons for short time or temporary layoff. You can't unfairly at the end of the month say, oh, we've got to tell you that we don't need you for the next couple of months. You have to consider and be reasonable and allow staff, even where possible, to supplement their income. Some companies are already relaxing things like restraint of trades or some of the conflict of interest clauses in their contracts, just to allow people to do some other work whilst they're waiting for their employer to be able to call them back again. So anything goes at the moment, as long as it's not violating with the company's restraint of trade or competing with the employer, but it's allow people to earn extra income. A, for their sanity, and also for most important for the
quite. No, I think you've hit the nail on the head there. It's strenuous times, completely unprecedented, and we should stick together. From employers, from the employees' side, government is doing their bit for sure. So Fatima, and thank you to you. I mean, so I know you're going to be sending me some notes after this that I will share with you, our members. And from that perspective, thank you so much and for your time this morning. And I'm sure we'll chat again.
Yeah, absolute pleasure. Thank you for the invite and all the best to you and your members.
Thank you, Fatima.
Pleasure.
Okay.
Bye-bye.
Bye. Bye.